Stop what you're doing. Right now, a crucial decision is costing American and European Bitcoin investors potentially thousands of dollars in taxes and missed gains. You bought a US Spot Bitcoin ETF, but did you know there's a quiet, overseas competitor, the European ETP, that, depending on your tax jurisdiction, could offer massive capital gains advantages? We're not just talking about lower fees. We're talking about a regulatory loophole that the average retail investor has completely missed. In the next 60 seconds, I'm going to show you the single biggest tax trap in US ETFs and why European ETPs might be the smarter play for your portfolio in 2025. Welcome to Crypto Market Views 24. Let's dive deep. All right, let's expose the first major pitfall for US investors. Many American Bitcoin ETFs, specifically the futures-based ones, are subject to something called mark-to-market taxation under Section 1256 contracts. What does this mean for your money? It means that even if you haven't sold your ETF shares, the IRS treats them as if they've been sold at fair market value at the end of each year. Any unrealized gains or losses are taxed annually. Here's the kicker. Under Section 1256, 60% of your gains are taxed at the long-term capital gains rate and 40% at the short-term rate. Sounds okay, right? Not if you're trying to manage losses.
And then there's the notorious wash-sale rule. For most traditional assets, if you sell an investment at a loss and then buy it back within 30 days, you can't claim that loss for tax purposes. It prevents you from creating artificial losses. But here's the critical difference. Bitcoin ETFs are generally not subject to the wash-sale rule. Wait, isn't that good news? Not always. While you can claim losses more easily, mark-to-market taxation means you might be forced to recognize phantom gains and then sell, creating a complex tax nightmare. Now, let's quickly contrast this with European Bitcoin ETPs. While specific tax rules vary widely by EU country, many European ETPs are structured very differently. They often don't fall under the same aggressive mark-to-market rules for individual investors, allowing for more straightforward capital gains taxation only when you actually sell your asset. This means more control over your tax bill, potentially delaying capital gains until you're ready, and avoiding the annual phantom tax headache that U.S. investors often face.
So, what exactly are the tax advantages of European Bitcoin ETPs that could put them ahead of their U.S. counterparts? The key lies in their legal structure and tax treatment across various EU jurisdictions. Firstly, unlike many U.S. futures-based ETFs, a significant portion of European ETPs are often structured as ETCs, exchange-traded commodities. This means they are often treated as direct ownership of the underlying asset, Bitcoin, rather than a contract. For investors in many EU countries, this physical backing can mean simpler capital gains taxation. You're typically only taxed when you realize your gains by selling the ETP. This avoids the annual mark-to-market headache and gives you far more control over your tax planning. Secondly, depending on the country, long-term holding periods for these ETPs can sometimes qualify for preferential capital gains rates or even exemptions in specific European tax regimes. This is a game changer for hodlers looking to minimize their tax burden. So what does this mean for you, the US or EU investor? While US Spot Bitcoin ETFs offer convenience, European ETPs present a compelling alternative, especially if tax efficiency and control over your capital gains are priorities. However, I must stress, always consult a qualified tax advisor for your specific situation. Tax laws are complex and vary greatly by individual country and personal circumstance. Before you decide where to put your crypto capital, do your homework and optimize your portfolio for both growth and tax efficiency. If this deep dive into crypto tax strategies helped you, smash that like button, share this video with fellow investors, and subscribe to Crypto Market Views 24 for more cutting-edge analysis and regulatory insights.
Thanks for watching, and I'll see you in the next one.